PantheonAI presents Markets Flat, Nvidia in Focus, and Zelenskyy's White House visit. Good morning, everyone, and welcome to the PAI Morning Briefing. It is Monday, August 18th, 2025, and I'm John.
And I'm Sarah. It's great to have you with us. We've got a fascinating mix of market moves, big picture trends, and some, let's say, quirky human behavior to unpack today.
Absolutely. So let's dive right in with a quick look at the major indexes. And honestly, Sarah, the big story is how little story there is. The S&P 500 closed at 44.74, which is a move of, get this, basically 0%.
Wow, dead flat. It's like the market is collectively holding its breath. What about the Dow and Nasdaq?
Same story, really, just tiny slips. The Dow is down about 0.08%, and the Nasdaq dipped just a bit more, about 0.11%. The only glimmer of green in the majors is the Russell 2000, which is up a modest 0.25%.
Interesting. So the smaller caps are feeling a little more optimistic, but I see the crypto world isn't sharing that feeling. Bitcoin's down about 1%, and Ethereum has taken a bigger hit, down almost 3%.
Right. So across the board, it feels like caution is the word of the day. No one's making any big, bold moves just yet.
And that caution makes sense when you look at the bigger trends, right? It feels like everything is tangled together right now. Geopolitics, new tech, monetary policy. For example, there's so much buzz around tech stocks, especially Nvidia.
Exactly. Analyst notes are pretty positive on Nvidia, but at the same time, we're seeing headlines that Ukrainian President Zelenskyy is gearing up for another visit to the White House. And, a high-profile visit like that immediately gets investors thinking about the ripple effects on defense, energy, and international finance.
That's such a great point. It shows how tech sentiment can be running on one track while global politics is on another, and they're bound to intersect. Speaking of volatility, one headline that really jumped out at me was about the British pound versus the US dollar.
Oh yeah, the GBPUSD pair. What's happening there?
Well, for the Forex traders listening, it's a pretty classic technical signal. It's dropped below its 100-hour moving average and failed at a key retracement level. Basically, it looks like sellers are taking control, and we could see it push down even further.
So a potentially bumpy ride ahead for the pound. It's funny how we go from these huge geopolitical stories to these very specific technical chart points. And then you have something else entirely. Like the news that billionaire Bill Ackman is set to discuss Howard Hughes' plans to buy an insurance company.
Right. It's a tiny headline, but it hints at these huge strategic moves happening behind the scenes. It's like a high-stakes chess match, and we're just seeing one of the pieces being moved. It makes you wonder what the endgame is.
Definitely one to watch. And speaking of big sectors, what's the latest with the housing market? I heard things are getting a little desperate for builders.
That's a good way to put it. Reports are saying home builders are boosting sales incentives to a 5-year high. They're basically throwing everything they can at buyers to move inventory, because confidence in the sector took a hit this month. It's a huge red flag about consumer confidence and the broader economy.
It really is a critical barometer. That brings me to another fascinating tidbit I saw. It's about investor psychology. A brokerage firm pointed out that advisors are often too quick to sell their winning stocks, but they'll hang on to their losers for way too long.
Oh, the Disposition Effect? It's such a classic behavioral finance trap. It's that temptation to lock in a small, quick profit, which might mean you miss out on massive, long-term growth. I think every investor can relate to that feeling.
Totally. It's that internal battle between taking the sure thing now versus holding on for a bigger potential prize later. It really makes you question your own strategy.
So true. And when you zoom back out to the sectors, you see these dynamics playing out everywhere. We mentioned Nvidia earlier. Analysts are bullish because of the demand for AI and data centers. But that's not the whole story, is it?
Not at all. There's always that undercurrent of supply chain risks and the threat of government regulation. It's like a high-stakes poker game where the tech giants have a great hand, but there are still wild cards in the deck.
And then you have the energy sector, which has been a total roller coaster. Global demand is there, but politics and the huge push toward renewables are injecting so much uncertainty. It's like trying to solve a jigsaw puzzle where you don't have the final picture yet.
I love that analogy. And the financial sector feels that uncertainty too. Banks are cautious, they're worried about interest rates, inflation. It's like trying to balance your checkbook while riding a roller coaster. Challenging, but not impossible if you're prepared.
So with all these moving parts, what are the experts saying? What's the big picture prediction?
The consensus seems to be that we're in an era of recalibration, recompletion. It's not a time to be overly bullish or bearish, but to be balanced and measured. An analyst friend of mine said, investing right now is like navigating a labyrinth. Without a thread to guide you, you'll just get lost.
And that's where having great information, like our AI copilot, becomes so indispensable. It's that thread. It helps you see the patterns in the chaos.
Exactly. So to quickly recap for everyone, we've got major indexes that are mostly flat, signaling investor caution. We have the tech sector, led by Nvidia. That's a hot topic, but faces geopolitical crosswinds.
Right. Then there's the housing market showing signs of stress, with builders offering major incentives, and the Forex market flashing warning signals with the British pound. And all of it is influenced by our own investor psychology, like that tendency to sell winners too soon.
It's a lot to process, but it really paints a picture of a complex, interconnected market. The key takeaway seems to be that diversification and a deep understanding of these cross currents are more critical than ever.
Absolutely. It's about balancing that optimism for innovation with prudence about the risks. So, a question for our listeners to chew on. In this environment, are you holding your winners tighter, or are you tempted to take profits off the table?
That's the million-dollar question, isn't it? Well, that's all the time we have for today's briefing. A huge thank you to PantheonAI for helping us sort through all this data.
Thanks for tuning in, everyone. Stay informed, stay curious, and remember, learning shouldn't feel like a full-time job. We'll be back tomorrow to unpack more of the market's mysteries. PantheonAI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.